There's no denying it. A lot of people were severely disappointed with crypto in 2025, and it's now extremely popular to be bearish. But I'm still a bull. So should I just finally admit that I was wrong? Should I jump on the bandwagon and start screaming doom and gloom? Should I tell you to expect a terrible 2026 in crypto and that the bear market will only get worse from here? Well, I don't think so. Okay, not at all. You know, in a lot of ways, by the way, I got to mention this too. In a lot of ways, 2025 was great, in particular for XRP holders. That's undeniably true. We were so vindicated this year. You know, XRP hit multiple new all-time highs, peaking at $3.65 in July. And, you know, leading up to this, we were told, literally for years, we were told that would never happen. There would never be a new all-time high for XRP, but it happened. And of course, there were spot XRP ETFs launched, and they've been wildly successful. In fact, you know, the first spot XRP ETF, which launched on November 13th, it was literally the most successful ETF launch all year out of over 900 ETF launches. And not just within the realm of crypto. You know, that's when you factor in every asset class. And I could go on literally for hours because there were so many positive developments that happened this year within the XRP ecosystem. And it could not be more clear that XRP is here to stay. Okay. It already won, which means we were right all along. That said, I recognize that doesn't guarantee that I'm right to think that we're not entering a bear market. I always admit, like, I could be wrong. And as most of you know, I strongly buy into the macro thesis from Raoul Pal and Julian Biddle from Real Vision. I've talked about it extensively on my channel. You know, I actually first covered that thesis about a year ago. It was either late 2024 or the beginning part of 2025. And I kind of knew the basics about it, but I found it fascinating. I was like, I don't know if this is something that's going to play out, but it's certainly fascinating. So I'm going to highlight this, and that's before it became popular. It's very popular now, now that it's clear we didn't have a euphoric blow off top for the market cycle. And then the more I learned about it, the more compelling I found the case to be for it. But I like to highlight opposing views because, frankly, I think it's useful to be exposed to a variety of perspectives. I mean, if you're like me and you just want to believe whatever's true, and if you believe something that's wrong, if you're like me and you want to stop believing the wrong thing, which means somebody's got to let you know, well, then yeah, it's very useful to hear different perspectives, right? It's not good to live in an echo chamber. That's the way that I look at this. And so, I mean, look, you guys are all adults. You can absolutely, and you will, come to your own conclusions about who has the most persuasive arguments. You know, and, you know, maybe you and I will agree, and maybe we won't. But either way, that's fine by me. You know, I just like honest intellectual discourse. That's what I'm looking for. Well, today I found a post from a chart analyst I follow who absolutely ripped Raoul Pal's macro thesis. I mean, he was quite harsh, to be honest. He was really harsh. And I'll share with you what he said in full context, and I'll provide my response and my thoughts along. But this is a really big deal, to be clear, okay? If Raoul Pal is correct, then by the end of 2026, there's a very high probability we'll be in undeniable bull mode, net worth much higher. But if Raoul Pal's thesis is wrong, the bears are right, then our net worths are going to go down substantially in 2026 and probably not come back anytime soon. And that's why this is arguably the most important conversation to have in crypto land right now. And we'll see how I do getting through this. Many of you have heard me say over the last few days, I'm sick. It's nothing severe, just a cold. But it is impacting my voice. And the longer I talk, the more my voice goes away. And I'm at that phase in recovery where I'm more likely to cough. So I've got some Hall's Fruit Breezers here on standby just in case I got to pop one in, but hopefully it won't be necessary for this hot jam. But so here is the post in question, and this comes from chart analyst Tony Severino, who I've been following for a fairly long time at this point. I can't remember exactly when I started following him. It's at some point probably within the last couple of years. You know, here's what I'm going to do. I'm going to read his post verbatim. I'm just going to read it. It's on your screen. I'm going to read this. Actually, let's make this chart. I'm going to read this, and then I'll share my thoughts after. So I'm going to do it in that order, exactly what he wrote. And so by the way, when he references Real Vision, that's the company that was founded by Raoul Pal. He's the founder and CEO of Real Vision, as well as global macro investor. And it's Raoul Pal and Julian Biddle that really came up with the macro thesis that's being espoused all over crypto land. And so again, when I started covering it like a year ago, it really was, I mean, it was like people would read it because it's Raoul Pal and he's very popular, but it's gotten ridiculous traction in recent months as things have kind of fallen apart and people are like, well, wait a minute, we didn't have the euphoric blow off top. What explains this? And so now it's become very popular actually, and tons of people have agreed that, yeah, actually that logically makes sense. But anyway, so here's what he wrote. The business cycle narrative in Bitcoin/crypto is the new M2 chart. And so when he says that, he's talking about, global liquidity. And he says, over a year ago, I cautioned against the clear cherry picking of a visual correlation that ignored reality and confirmed biases. Try and recall which accounts were ready to live and die by this meaningless temporary correlation in M2 and realize they're the same ones clinging onto the business cycle turning up from here. ISM/PMI is due for a cyclical trough next, now that it's past peak cycle amplitude. You can't just point to it rising because your portfolio and your bullish reputation rides on it. A cyclical lower low is very possible, even probable, like we saw in the 2000s. But since that's before Bitcoin, most analysts ignore all previous history. I noticed that most of the regurgitated deceptive narratives like M2 and Biz Cycle originate from Real Vision, then gets echo chambered by every big crypto analyst, in quotes, because it seemingly validates their hopes. Beware who you trust. Ooh, them sound kind of like fighting words. That's a little feisty there, isn't it? Some kind of strong assertions, deceptive, so on and so forth. Here's the thing though, okay? The argument that Tony is making, it's built on a straw man argument and a zoom in fallacy. That's exactly what this is. I was just shaking my head as I read through this the first time. Like Raoul Pal, just to be clear, Raoul Pal has never said Bitcoin should track a global M2 tick for tick. Not once has he said that. In fact, his framework is explicitly long-term, okay? Liquidity is the driver of markets. It's the backbone. And when you let time pass and zoom out, Bitcoin's chart trend shows that it aligns with global liquidity perfectly to the naked eye. In fact, so much so that Raoul Pal has stated that the correlation, it's somewhere around the range of like 87% of the time. That's how high it is. So short-term deviations are expected and openly acknowledged, just to be clear. Doesn't mean you can't have deviations, And look, I followed Raoul Pal in depth enough and long enough to know that absolutely what I just cited there is what he believes. I know that 100% to be true. I know it's fact. So pointing to temporary decouplings and framing that as evidence that evidence the framework is deceptive is arguing against something that was never claimed in the first place. That's the problem. That's a straw man. I don't know why Tony is framing the argument this way, but it's not in line with reality. And, the same mischaracterization shows up with ISM in the business cycle. It's the same thing. Liquidity is a metric that drives markets, okay? But most metrics don't drive markets. ISM does not drive markets. It reports on current conditions effectively. That's what it's doing. Because liquidity increases first, then markets reprice higher. Economic behavior follows, of course. And then surveys, which is what the ISM is, surveys like ISM confirm it later. So that causal ordering, it's not even controversial. It's just how macro works. And so that's why I'm just so confused as to how Tony won't just acknowledge this. This concept, frankly, was well understood many, many decades before Bitcoin was ever created. Before Bitcoin. It's still true today. The crypto asset class is just a new asset class responding to that structure. So it's just astonishing to me that he won't acknowledge that. And then he makes this macro thesis that's well accepted and has been since decades before Bitcoin. It's deceptive. I mean, and look, markets have historically bottomed before ISM bottoms and topped before ISM tops across multiple decades, okay? Long before Bitcoin existed. And so zoomed out, the stocks and ISM clearly move together across full cycle. So it's a very real thing. It's well documented. It's not hard to find out that's true. So zooming in on short-term divergence between Bitcoin and ISM does not invalidate the framework, period. It just doesn't. I'll say again, deviations are expected. And again, Raoul Pal has even estimated that the correlation only exists about 87% of the time. So it is most of the time. But when you don't see it, go tick for tick in perfect correlation, just please acknowledge the exception doesn't break the rule, period. And you know what else? What's missing from the critique is a competing macro thesis. So he doesn't buy this macro thesis. Okay, fine. He doesn't have to. Even though it goes back decades before Bitcoin was created, it's well accepted. It's not even controversial. He doesn't accept it. Fine. I'm willing to listen. What is this? There's no alternative causal model being presented here. There's no explanation of what actually drives markets across regimes and cycles. It's just a zoomed in chart. And the claim that because correlation isn't tight in the short term, the broader framework is misleading. That's what we're looking at here. That doesn't make logical sense. If he wants to plop down his own macro thesis, I am ready to listen. I will be very genuinely interested. Absolutely. And I will take it seriously. But, consider he'll be standing on the shoulders of giants at that point, who figured out what really drives markets many decades before Bitcoin was created. Look, one of the multiple mistakes he made in this post is in treating short-term correlation as a falsification test for long-term macro frameworks. Look, temporary divergence, it doesn't invalidate causality. It just doesn't. It just reflects timing and lag. That's it. Liquidity drives markets. Markets drive behavior. Behavior shows up in surveys, ISM. And so when he wrote, I guess it was this part right here. I think this is probably right here. When he wrote in his post, ISM/PMI is due for a cyclical trough next, now that it's past peak cycle amplitude. I don't know how he came to that conclusion. Look, we know that the bulk of business loans mature in 2026, right? Which means refinancing is coming. Like, it just is. And that will result in a huge increase in liquidity. And you know what history shows us follows? Markets rising, increased economic output, and ISM darting upward as a result of that. It's all downstream from liquidity, folks. All of these metrics are. It's just proof that what has always happened is happening as it unfolds. That's the point. And so I don't know why he denies this macro reality. I don't get it. I really don't. It's surprising. And because he hasn't articulated. He's just against a thing. He's not for something, And it's not like these businesses realistically have a choice when it comes to refinancing in 2026, by the way. So that liquidity surge, it's not like much of a hypothetical. It's grounded in reality. Like, it just is going to happen. And here's why I say that. The alternative for these businesses, it's paying off all the debt in full, all of it, which frankly, let's be real. Most companies don't have the funds for that. And even if they did, they wouldn't find paying off the debt to be the most prudent form of fiscal expenditure, let's say. Okay. Though, shifting slightly, what I actually find most disappointing here is the claim that Raoul Pal's macro framework is deceptive. That bothers me. That's a serious accusation, and it's completely unjust, because deceptive means intentionally misleading people about what you're claiming. Raoul has never done that. He has been crystal clear for years now that liquidity is a long-term probabilistic framework, not a guarantee of the specific result, not a guarantee on the exact timing, and not something that's supposed to line up tick for tick with price. Okay? Deviations are openly acknowledged. Legs are expected. Nothing is hidden, period. So that's what, so calling that deceptive, it certainly doesn't expose a flaw. It misrepresents the thesis. That's the problem. That's why I'm disappointed in Tony. I mean, frankly, I always viewed him as pretty level-headed, but once I saw this post, I was just shaking my head. I really was. I was like, what is this? I mean, he called out reputable people in a completely unfair and unreasonable way. And that's the real issue here. You don't get to redefine someone else's framework, judge it against standards that it never claimed to meet, and then accuse them of misleading people. That's not skepticism. That's irresponsible framing. That is not reality. If you disagree with a macro model, fine. Explain why. I will listen. Present a competing causal framework on a macro scale. Do that. Show what actually drives markets instead. But that's not what he did here. Of course, there can be short-term deviations. There can be short-term instances where, one thing that normally tracks, one metric that normally tracks another metric or asset normally does, but then it doesn't for some period of time. Duh. Of course that happens from time to time. But the vast majority of the time, the correlation is intact, which is why if you just bet on it being intact 100% of the time, you'll be right most of the time. That's the way odds work, as it turns out. And when you tell people this, look at how he ended his post. He says, when you tell people beware who you trust, without accurately representing the position that you're attacking, as Tony did here, you're harming your own reputation, whether you realize it or not. I'm disappointed. I've always been a fan of Tony here. Any critique he has, totally fine. That would never change how I feel about him because I engage in intellectual discourse. But the framing of this, not cool. Don't like it. It's not in line with reality. If anyone's being deceptive, it's him, because this is a straw man argument, and he called out Real Vision. What? Doesn't make any damn sense. And then he got spicy with another guy who believes the same thing here. I'm not going to, for the sake of time, I'm not going to read this whole thread, but it's right here on the screen if you want to pause and look at it. But there's Tech Dev, who is very data driven. I think he does a great job. I've been following him. I don't even know how long, probably over half a decade. 561,000 followers for a reason. He's on board with this thesis as well, and he's been defending it, but he also doesn't promise any. And so Tony Severino had a critique about an aspect of the thesis, and then Tech Dev responded here, and then Tony had this snarky response here. He wrote, "Cool, then speak with less certainty to the 560,000 followers you're leading off a cliff." Woo, that's unnecessarily spicy. Why is he doing that? I don't know. I haven't seen Tech Dev snap at anyone ever. And so Tech Dev wrote back to him and said, "I see way more certainty in that statement than mine. Guess it's okay for your follower count. Take your antagonistic shtick somewhere else, like the last time you called for Armageddon and issued apology tweets." And that happened too, actually. He was calling for the Bitcoin top, and that would have been, I guess, April or May range. I covered his perspective on my channel at the time. He was wrong. He was very, very wrong. And once he realized that, he issued a public apology. And frankly, from my perspective, he didn't need to apologize. It's okay to be wrong about stuff. I'll show some grace. I'll show a lot of grace, actually, for something like that. It's just like if you're being honest, you're like, here's what I think. And then you find out you're wrong. Okay, well, I did my best. Here's what I got wrong. Okay, totally fine. There's no problem there. But he was wrong about that. Could he be wrong about this also? I mean, because he seems to be getting the peak market stuff a bit off. It makes me question if he's good at that particular thing now, especially when he's responding like this and he's not articulating an actual thesis. It makes me wonder. It really does. And so, it's just like he wanted people to show him grace when he was wrong, a little over half a year ago about that. And then there's Tech Dev and Raoul Pol and Julian Biddle acting in good faith. And then he doesn't want to play nice with them and why are you acting like that? It's just not useful, folks. And I do think the best is yet ahead. Here's a post from Cantonese Cat. He shared this chart and he said, "This is the tightest Bitcoin Bollinger Bands have ever squeezed for its entire history on the monthly chart." And the reason this is significant, I'll highlight this, and I've shared this many times on my channel. It's because when the Bollinger Bands tighten, that metric tells you something's going to blow. Now, it doesn't tell you if the direction is going to be up in price or down in price, but it tells you this it's going to blow. When volatility reduces this degree, things are tight, it's going to go. And so on April 16, 2024, there's this post from Charting Guy, and he wrote, "XRP monthly Bollinger Bands are now the tightest they've ever been in history, 0.7 for the width. The tightest it got before this was 0.73 in 2017, 1 month before rocket ship emoji." And then he sarcastically says, "Probably nothing," because he knows it's. And it did tighten even further than that for about half a year, and then it went. So just because it's the tightest right now, it doesn't mean it has to go right now. And it didn't for XRP, it had to wait half a year, but it was an outrageous burst that many people said would never happen. And now you have Bitcoin with the tightest Bollinger Bands in history. So again, that doesn't tell you directionally what's going to happen, but if the bulls are right, you're going to see a gigantic surge whenever this thing finally busts. And this was reposted, by the way, by Credible Crypto. He shared this with his 485,000 followers on that. And he wrote, "A historic level of higher time frame volatility contraction for a historic run to follow. The parabolic move up on Bitcoin to complete this cycle, and the final fifth wave is loading." So he also believes that this is of great significance. And he thinks the burst when it goes, obviously, not to put words in his mouth, but he thinks it's going to be up, not down. So I think the best is yet ahead. And I thought this would probably be a good way to cap off the year, because again, what topic on a macro, what topic is more important? It is the macro top. This is it. And that's why I thought this would be a great way to wind up the year, just share some additional thoughts and why I have the conviction that I have. And I am open-minded, but you got to bring arguments. And if you have a compelling case, I will change my mind. I will not just be married to an idea and then out of ego or something, just hold on to it. I don't have an ego at all, dude. I'm a Midwest guy in the United States. No egos here, all right? If I'm wrong, I'm wrong. And sometimes I am wrong, and that's fine. But I think the best is yet ahead, and history indicates that's what we should believe is likely. Even if we haven't bottomed, we could go lower first, sure. We'll see what happens here, but I think that my optimism is rightly placed, and if I'm wrong, then I'm wrong. It won't matter to me personally though, because whether I'm right or wrong, it doesn't change my strategy. My strategy remains intact. It's I buy stuff and then I do nothing until I'm enticed to sell. So whether I'm right or wrong, and I think that's the right approach in investing. So whether I'm right or wrong, it won't matter. It's just an interesting thing to discuss basically, but for me at least, no, I'm not changing anything either way. Either I'm presented with the prices at which I want to sell or I'm not. I can't control that. I'm just sharing what I think because it's fun to talk about this stuff along the way. I'm hyper interested in this just like you guys. So anyway, my voice is starting to go. I better hop off here. Happy New Year, everybody. Hope you have a fantastic entry into 2026 here. And so it's now, as I wrap up the video, what time is it? It's 5:55 p.m. Central Time. Wednesday, December 31st, 2025. Can you believe this year's about over, man? I'm still happy. Overall, because we were vindicated. I'm not happy with I was hoping that we would have had that euphoric top just like everybody, but I still think it's going to come. And even if I'm wrong, we'll get one at some point in the future anyway. I can't control it. So it's not of material concern to me. It's just fun, conversation fodder for sure. But Happy New Year to you guys. Hope you guys are doing something fun, whether it's with family or friends. I'm going to have a lame evening in because I'm sick. I cannot go. I'm like hacking up along. I'm so happy that I made it throughout this video without having a coughing fit. This is fantastic. This is a success as far as I'm concerned. I'm going to stay in. I'm going to go to bed early. I don't even think I'm going to be able to stay up till midnight, to be honest. I am feeling tired. My body's saying go to sleep. So I think I'm just gonna get this published, put the thumbnail together, and then that's it. I think that's gonna be it for me. Hang out with my pet peeve. I got my pet peeve here as I wrap up this last video of the year. She is sleeping. I'm looking at her right now. She is sleeping under my desk, just looking all cute. My little 11-year-old terrier mix. And some of you know, but I don't mention this often, because why would I? But she's under my desk for almost 100% of videos I've ever just quietly just hanging out under my desk. Just chilling. Got a nice little pad for her to lay on and a pillow, and she loves it. All right, well, I guess I'll go ahead and wrap up here. That's it. I think 2026 is going to be a lot better than 2025. We'll see. I could eat those words. I don't know for sure. I mean, I do have a crystal ball, but it's broken AF, so it is what it is. But yeah, that's it. See you next year, guys. I'm not a financial advisor. You should not buy or sell anything because of anything I say. All right? That would be a very, very, very bad idea. Until next time. It's crackling still. Do you hear this? Tell me in the comment section. Do I sound like, does it sound like I just hit puberty? That's what I think the answer is yes.